Hey guys, what's going on? My name's Adam, and today we're going to be talking about why this electrical vehicle manufacturing company has shot up so much in the past week, past month, past year. And you should know, of course, this stock by now. It's Tesla. All right, they have been an absolute beast. Look at the past 5 days, stock shot up by 20%, past month by 55%, past year. By 500 or 600%, depending on the time that you bought. Okay, and I mean, you're looking at a company with a market cap now approaching $300 billion, right? And you'd expect something like this, like such tremendous growth with a very small cap company, maybe in the millions of dollars, but not such a large cap stock now in the billions, hundreds of billions of dollars to shoot up this much. And so, why? I mean, of course, because of their business model, but also because of the increasingly bullish thesis of investors such as Cathy Wood, who manages the ETF called ARK Invest. All right, so I'm going to unplug this and we'll listen to a CNBC interview um, where they got Cathy Wood on, and she explained her or she defended her $4,000 call on Tesla. All right.
Wall Street is getting serious about industry disruption, and there are a handful of ETFs focused on just that. ARK Invest products are built to capitalize on disruptive forces like artificial intelligence, perhaps robotics, genomics, next generation.
Okay, and again, one of these disruptive forces is Tesla, and they go on to get her on and ask her some questions. And I believe around this point, they talk about her $4,000 call option.
Or worse, because there's always two sides to a story. You at ARK Invest have become very closely associated with one stock in particular, and that is Tesla, because you made a lot of waves by attaching a $4,000 price target to the shares at one point.
Right. Okay. And she goes on to defend herself and point out why she made this option, this call option. And a lot of the reasons that are found here can be found on their website, ARK Invest. I'm just going to plug this back in. And so we're just going to go through a couple of those reasons and explain why there's such a bullish thesis around ARK Invest. Okay. So let's just go to slideshow. Okay. And I'll do laser pointer. So August 2018, ARK published an open letter and said that if taking Tesla private, because Musk tweeted saying that he was going to take Tesla private at 420, ha ha ha. But of course that didn't happen. But they're saying that taking Tesla private at 420 would deprive shareholders of significant returns. And so since then, ARK has updated its Tesla valuation regularly. And what's highlighted here is that they believe the share price will be around $7,000 in 2024, and with a bear case that there's a 25% chance that the stock will be worth $1,500 per share in 2024, and bull case that the company will be worth $15,000 in 2024. Okay, and so the main reasons here are well, one, because of gross margin. So margin basically is so let's say the cost of a car is 30,000 and it takes 20,000 to build that car. So your gross margin would be 10,000. So it's basically how much revenue you make from a car or from any product minus the cost of the car or that product that's sold, right? And so they think based off of Wrights Law and previous trends in the auto industry that the cost of manufacturing a vehicle will decrease and that will increase their gross margins. And they believe that they'll be able to expand on their capital efficiency, so cost per unit will decrease again, and that their taxi network, which is their autonomous capability, and so if they can launch a fully autonomous taxi service, that will also increase their profitability in the long run. Okay, so here, ARK's evaluation is based on 10 scenarios, each of them probability weighted. So bull case for Tesla does not assume the most aggressive inputs, that's what they say, of the three variables noted in the previous slide. and then they also include two scenarios that encompass the worst case factors. So one, a 3% chance that Tesla is unable to access capital markets. So they're not able to, for example, dilute shareholder value by increasing the amount of shares that are out there. And two, a 1% chance that black swan event where Tesla goes bankrupt. So here, best case scenario, in their opinion, will leave a price target of $22,000. And so that's if Tesla lowers costs, builds factories efficiently, and launches its autonomous taxi network. And again, worst case scenario, stock price drops to $0 with 1% chance if they go bankrupt. All right. So first of all, what is Wrights Law? This graph here exemplifies it, and it shows that as you increase, for every incremental cumulative unit produced, the cost of producing that unit decreases, right? And so you have to understand that both of these scales are logarithmic, so it doesn't just increment from 10,000 to 100,000 in units of 10,000 because it goes from 100,000 to a million. So again, this is like exponential growth. Same here on the x-axis. So the black line is Wright's modeled cost, so Wright's law, and then the purple dots are actual Model 3 costs. So the cost to produce Model 3, Q3 2017 all the way to Q4 2019. So it went from, I don't know, this looks like around $750,000 all the way to now maybe, I don't know, that's like 50,000 or something like that. And so expected Q4 2020 to be, again, maybe around $30,000, and then by Q4 of 2024, again closer to that $10,000 per car made. All right, so and then they compare it to a company like Ford and the internal combustion engine, and so we'll go on to the next slide to access that. Oh, this is a little bit off the screen, but Ford's cost is green right here, and again models Wright's law, whereas you increase the units made, that decreases your price, right? And then the forecast Model 3 unit, again, is just going to decrease, right? So they also go on to say here, and again, this is just some extra data. So average cost of Tesla Model 3, so that's the calculated one, and then Model 3 cost. So again, Model 3 cost decreased exponentially and is projected to decrease even to Q4 2020. And then this is how much you can buy Tesla for, right? So now it's decreasing by over, I don't know, maybe this is like $60,000 or so, and then now down to below $50,000 for a car, right? So one thing about Wright's law that they note is that a mature technology appears to stop declining in price because it takes so long to double production off of a large cumulative base. So as you can see here, the Wright's law is modeled based off of cumulative production. So right now, electric vehicles are relatively new. So they say that the cost of an average internal combustion engine, so for example, like a Ford or a Toyota, so the average vehicle of the internal combustion will edge down by 0.5% in the coming year, while electric vehicles, their average cost will drop by 12%, right? And that's just because, again, there's less units of electrical vehicles out there as compared to how many units of electric vehicles, internal combustion vehicles are out there right now, right? So the ability to lower costs is giving Tesla significant operating flexibility to reinvest in profits into more research and development, or lower cost, as you can see that they're doing with this green line, to stimulate demand, right? So it has been doing this and will probably continue to do this sometime into the future, right? So again, this is ARK's modeled average selling price by number of units. So again, as the number of units sold increases, they expect that the cost again will go down, right? And this is like with any technology. First, initially, it would be incredibly expensive to buy, for example, a TV when it just came out. But now it's really cheap to buy a TV, even second-hand nice TV, at a reasonable price, right? So again, they go on to say that despite the assumption of a steep decline in average selling prices, if costs were to fall in line with Wright's law, ARK's model suggests that Tesla's auto gross margin So again, revenue minus the cost of the goods sold could approach 40%. And again, the higher the number, the better it is. So a 40% profit margin would mean that for every dollar of revenue, they're taking in 40 cents of not net profit, but 40 cents of that revenue minus cost of goods sold, which is really impressive. And they're saying that Tesla's gross margin could increase modestly to 25% by 2024. And they talk about the Shanghai factory that they have, and that in their capital efficient case, we assume that Tesla will be able to build factories for $11,000 per unit volume of capacity. And then again, for context, Tesla confirmed that 1.6 billion in financing was necessary for its Shanghai factory, with initial capacity of 150,000 vehicles. So if 1.6 billion were to net 150,000 vehicles, the cost per unit of that initial capacity would be roughly $11,000. Okay, and so last slide here. So this is just, again, if they actually do come out with their autonomous taxi network, this basically breaks the mold of a traditional automotive manufacturer's business completely, right? So Tesla would shift from a model of one-time transactions, so buying a car, at hardware-like margins, to a model of recurring transactions at software-like margins, which basically means increased margins. So good for Tesla. So charging passengers per mile and taking a platform fee, right? So autonomous taxi network could provide Tesla with capital to invest in factories to produce more vehicles, which would again lower production costs and expand Tesla's autonomous fleet, right? So cash generated from the Tesla taxi network, and then again that would lead to increased investment in Tesla factories, and then more autonomous Teslas, and then it just goes in a vicious cycle. So main three reasons as we go back to here are why Tesla, or they're so excited about Tesla, and why they have such a bull case, even up to 15,000 in 2024 for the share price, right? So again, increased gross margins, increased capital efficiency, and exciting new taxi autonomous network of Tesla is basically the three main bullish points around Tesla, and why the stock price could shoot up so significantly over the coming years. All right, so that's the end of the video for me. Thank you for watching. Let me know what your opinion is of this and ARK Invest and Cathy Wood and what she goes on to say. Thank you for watching, and have a fantastic day.